All right. We are live and welcome back to another episode of Token Narratives. Shout out to our sponsor, Trezor, the OG hardware wallet. Check out Trezor.io where they've got a. David, stop typing. Come on, man.
I'm saying hello to the audience.
Check out Trezor.io. Jesus. Check out Trezor.io, where they've got a Black Friday sale with up to 40% off on select models. Happy Thanksgiving, everyone in the States. Hope you're enjoying sitting in the corner talking about crypto or scrolling on X while your
in the
family's
basement.
wondering.
Sitting in the basement.
Is it the basement or the attic? Which one?
Oh, the attic. Sorry, you're right. I was wrong with that. The attic.
All right, let's get into it, David. Starting off with some price action. We've got a bit of a recovery here. Is it a dead cat bounce or a reversal? That's the question. That's what everyone wants to know.
Personally, I am not convinced we're not done with some of the downward action. I think it's too early to tell right now. I think some of the accounts that I follow think that like 93, 94, whether we're able to break through to that and hold is kind of where they're at, and I would agree with that, at least on the shorter term. I think, as we've said over and over again, on the medium to long term, I think the trend is still pretty solidly up. But if you're going to try to play around here, um, it's it's we're kind of in no man's land. I don't know what you think, what your overall feelings are on that.
Yeah. So this post from Trader XO got me feeling a little bit down. So if you look on here, the Bitcoin has broken the 50-week moving average, and when it's done that in the past, it has retraced all the way down to the 200 and even 300 weekly moving average, which would indicate that we've got quite a bit further to go here on the downtrend.
Yeah, I mean, I still you bought treasuries at the beginning. You are now doing, but
Treasuries, yeah, but they also have so they're over collateralized. They also have other sort of investments, right? And they apparently they hold more gold than Bitcoin. Apparently, about $10 billion in Bitcoin is what they hold, and gold it's more like 14 billion. And then this chart here is showing Tether gold purchases over the last quarter were more than any other central bank, with the caveat that China is probably not at this number. It's probably much higher because it's their self-reported, and I think people widely believe that China is buying a lot more gold than they're saying they're buying. So I thought this was interesting as well. Like Tether's well-run business,
yep.
hedging more on gold than Bitcoin.
Yeah, I mean, it makes sense, especially given the fact that they, I mean, as we've talked about before, gold is just way less volatile than Bitcoin, and if your business is based around issuing a stable coin, um, holding a lot of a volatile asset, especially during drawdowns when businesses want redemptions, it's not very smart. So yeah, this just makes sense.
Yeah. Right. So they have a different risk profile than your average retail punter. Fair enough. This is one other chart relating to the stock market, and yeah, basically it's showing that Bitcoin is highly correlated to the stock market, but now it's on the downside. So when the stock market dumps, so does Bitcoin, but when the stock market pumps, Uh, Bitcoin, not so much.
Painful. uh,
So
this basically, I think you maybe you're going to go to this next. So I'm sorry if I'm stealing your next point, but this basically to me shows that it's become kind of a popular talking point. But I mean, it's because it's true. Uh, Retail has moved on from crypto for casino-like returns, right?
yeah,
It's now in the stock market again, right? It's in
exactly.
AI, it's in these quantum stocks and maybe biotech. I don't know, but yeah. So you're not getting that crazy speculative retail redacted behavior in crypto as much. That's in equities.
Yeah. All right. Now, before we move on to the hope or the positive indicators, David, because I see that you've populated our pre-show doc with several of them. Just a reminder that we are celebrating our 100,000th subscriber on our YouTube
Woo!
channel. And so we've got $500 of crypto to give away to people who are subscribed to us on YouTube and ask a question in the live stream comments on our YouTube post. So go check that out. We'll be answering the questions later in the show. And yeah, if we answer your question, you're going to get $100 of cryptocurrency, the future of finance.
Future finance, yeah. Uh, okay, so we've just spent the opening making everyone feel depressed and probably getting them to dust off their Robinhood account, open up that app. let's talk. Let's talk about some I guess bullish things that are happening in crypto. Um, some of this pertains not just to crypto, so you could argue like a lot of what I say is applicable to risk assets broadly. Fine, but we'll get into some like crypto specific things in a bit. But starting off from a higher level, um, it does appear that like liquidity conditions are going to be improving. Again, this helps all risk assets, but has been noted by many people, including a lot of TradFi people. Bitcoin and crypto are more sensitive to liquidity than even equities, and so liquidity improving would have a more outsized positive effect on crypto than it would for other things. Why is liquidity improving? Well, QT, quantitative tightening, is ending. Apparently, it officially ends December 1st. So says Arthur Hayes, and several other people have kind of echoed this. Um, Meanwhile, CME future volumes for crypto are hitting new highs, and the market is repricing a December cut. This has been like a weird phenomenon for the past 2 months where I honestly, Graham, I can't remember this year where we've seen such wild swings in the prediction of a rate cut where it was so high and then it went down to like 30% like a week ago in terms of will there be a December rate cut, and now where is it now live? Is it like 80% again?
It's above 80%,
That's, I mean,
83.
it's just that, I mean, these kinds of swings are wild. Just as an aside, um, this is, however, the Fed is messaging. This shows that they're messaging it poorly, right? They don't want these kinds of wild swings. So whatever the heck they're doing, just in the past couple of months, the past month, they're doing it wrong, right? Like they're supposed to be kind of smoothing out and calming markets, and to have these kinds of crazy fluctuations and then seeing the kind of cascading effects from them. This is not what they're supposed to do. So
Yeah, well, I think the market has sort of realized that the jig is up. Nobody really believes everyone knows that the Fed, what their job is to try to assuage volatility, like make everyone calm, and the market sort of just sees through that now, and they don't believe anything they're saying. I feel like that's part of it.
Yeah, that's probably part of it, but also apparently I read from several financial people I follow that they think the biggest issue is that they're now oversharing. Like all of the Fed governors are going out and talking too much, and maybe the markets are not used to them being so kind of talkative, and that's causing markets to swing wildly as different people say different things, and so then they some of these people think that they need to just kind of go back to what they used to do, which is talk way less, and only speak at these kind of
There's
certain
symposiums.
yeah, these certain like predefined dates that are given out a year in advance. In any case, looks like there's going to be a rate cut, and so then markets which had been repriced lower, right, are now repricing higher. So again, liquidity increasing. Uh, on the other hand, not on the other hand, in addition to this, you have institutions, traditional financial institutions are steadily marching into crypto. They are um, buying Bitcoin. They're mostly buying Bitcoin and ETH and a little bit of the long tail assets like Solana, which had, I think, up to 17, 18 consecutive days of inflows into the ETF. Really, really good.
Yeah. We also, of course, had Harvard endowment revealing from their filings, their most recent filings, that Bitcoin was their biggest addition to their portfolio in the last quarter, and it's like now constitutes, I think it was about 1% of their entire endowment.
Yeah. Um, so institutions, as we talked about last week and the week before, they're buying. They're not buying like scared little paper-handed retailers. They're buying slowly and methodically. Um, and connected to this, you have strong earnings in banks. You have strong earnings in equities like Nvidia, Google, things like that. And as one macro analyst described it, it really is still kind of a Goldilocks setup right now into year end. It's not too hot, not too cold, kind of just right for risk assets. Um, just as a little conspiracy theory, I don't know if you saw last week where Google CEO came out and said AI might be in a bubble. We need to be careful. Did you remember that news? And then
Right.
it caused AI related stocks to kind of tumble like 3 to 5% or something like that.
Yeah, and then there was a parade of the AI tech luminaries, like going out on all the shows, on all the media, saying, "No, no, no, don't worry, don't worry, it's all fine, it's all fine."
Yeah. But to me, so someone asked me like, why would Google do that? Why would the Google CEO do that? Half their business is AI, right? Their future is AI, and and I personally think you have like Sam Altman last or earlier this month making the markets queasy. You had Google CEO talk about AI, and how like, oh, we might be getting too hot. I think they're trying to pump the brakes a little bit, right? To kind of deflate a little bit of the speculative bubble, knowing then that it can kind of reflate at a more healthy pace. Anyway, that's my conspiratorial theory. They're actually trying to talk markets down a bit for the interim, and I think it's had the requisite effect that they want, which is to kind of cool the speculative fervor, and then they can kind of juice it up later. Anyway, conspiracy theory on
Interesting.
my part. Yeah. All right. Now, um, the important takeaway here is though that as we've said before, TradFi this year, 2025, has been the marginal buyer, and they continue to be. That means Bitcoin and Ethereum, and to a lesser extent maybe Solana, XRP, but mostly Bitcoin, will do well and will continue to do well. But all the other alt complex, every episode we get people asking about what about alt season, what about meme coins, all that institutions can't touch. And even when they can touch, which is not very many of them, they don't want to. It's way outside of their risk purview. So you kind of have this bifurcated market within crypto, which is these majors are doing reasonably well even in this drawdown, and they will do well going forward. This alt stuff is just not going to do well, and it hasn't all year. So pretty much
Yeah.
the advice would be don't buy it, right? Don't buy these meme coins, don't buy alts, because the only people who are buying them can't touch it, or only buying crypto. Yeah, can't touch it.
The only people who are buying can't touch it. This might be a perfect transition into the Haseeb article,
All right.
David. So, Haseeb Qureshi, Dragonfly Capital, and host of Chopping Block podcast, an excellent podcast. Also, friend of Token Narratives podcast. We've had him on
Boom.
twice.
That's right. Great guy.
Incredibly well spoken crypto insider VC, right? And sensing doom, the doom, the depths of doom that crypto Twitter has become, and the sentiment is at all-time lows. Lower sentiment, by the way, now. If you believe the fear and greed index, lower now than like in the aftermath of the FTX uh, collapse, which by all measures, uh, things were much worse then. Like not only was that like there just absurd amount of fraud as revealed by the FTX collapse, but you also still had at that point, like the Gensler SEC and the Biden anti-crypto and Elizabeth Warren, all like they were in full force, and yet the fear and greed index at that time, there was less fear on the timeline or like in the sentiment in the markets than there is now. It was like 20, 30 then. Now we're like less than 20, or we have
Yeah.
been in the last few weeks. So
Also, can I
yeah,
just add a little bit? I think the thing that really pushed him to write this is last week, a couple of weeks before, but specifically this week, he's just been attacked uh, because of Dragonfly's investment in Monad, and he's been he's been talking a lot about Monad for the past couple of weeks. He had like an AMA on X like a week ago, right? And so he's just been getting attacked constantly on Monad. There was this funny post. I don't know if you saw this like 2 days ago or yesterday. Somebody screenshotted something that he had said, right, and then wrote like oh, this is why crypto is broken and why VCs are evil. And Haseeb responded with the first line was something like, "Bitch, tag me if you're gonna criticize me." That's like a quote. So he's obviously, I think, a little exasperated by all this like specific hate on L1s and Monad in particular. Anyway, continue.
yeah. Well, so I mean, if we had to summarize what his thesis is or his point, it's basically that don't try to value the L1s on a like a P&L basis or a price to earnings basis. It's all about the network effects. This, which is something that another guy I really like, Raoul Paul, has been talking about for years. Uh, these things should be valued on their network effects, and he's saying this space is going to grow exponentially, and people don't understand that. They're thinking linearly. Uh, Crypto's sort of been captured by TradFi, which has a linear thinking, while in reality, it's more of a Silicon Valley type exponential trend that we're looking at here. And
He gave as an example Amazon, right?
Amazon was
Which
the
which
example given.
which is a really good one, to be honest. It's I remember all through the '90s, and not through the '90s, sorry, through the late '90s and the 2000s. Everybody was dunking on Amazon for never turning a profit, right? And they didn't turn a profit for 20 years, right? It's just
Yeah,
constant, and you saw that everywhere, and obviously they were all wrong, completely as wrong as it can get. And this is I think kind of his key point is that all those people dunking on him were mouth breathing mid curvers who were using um, TradFi models and metrics, and they didn't really understand what Amazon was going for, which was everything.
Yeah. So when I read Haseeb's post, I felt it was almost as if he was personally responding to me because exactly a week ago I explained why I capitulated on Sol, my Sol Solana holdings. Basically, I said it's because the PE ratio doesn't make sense, and also I said that it's because I just don't see a path to the chain accruing value. Now, I don't know if we want to get into the rebuttals of Haseeb's post right now, but I actually, while I get his point that this space is probably going to, yeah, follow some exponential curve, I still don't see how the value accrues to the L1s.
Yeah, but
I still don't actually see it.
yeah, but all those people, just to bring it back to Amazon, for 20 years, they
Yeah,
also they also said similar things like, I just don't see how they can ever turn a profit, right? Like
yeah.
they're always gonna be losing money. You can't have a business like this. Look, they have never made money. It's been 20 years, 2 decades, never made a dime. I just don't see how they're going to make money. It seems ludicrous now in hindsight, right? Obviously.
I guess so.
Um,
I mean, people pointed out in the comments, in the replies to Haseeb's essay, okay, is it fair to compare Amazon to an L1? I mean, like someone wrote, are L1s more akin to Amazon or HTTP? Of course, blockchains will become ubiquitous and power the world, but how will they actually be valued? And tokens are not at all analogous to stocks from an ownership point of view. Another person says Amazon is a bad analogy. Amazon is what it is today because of its pivot to AWS, Amazon Web Services. If it had stayed only in e-commerce, it would have been resigned to the dumpster heap, like say
okay.
eBay. Wait, just let me just finish this one.
Okay.
Ethereum cannot pivot the way Amazon did, given its structure. Thus, will always stay on its L1 lane. A better analogy for Ethereum is Cisco, and we all know that how that worked out.
So I think these people they sound like, man, this is going to tie into my rant later on, but they sound like a lot of the people who were um, attacking or complaining about Mike Green's article. They're like latching on to something, little piece that they can
Mm.
actually about, right? And
Yeah,
then by actually doing something on some piece which is not that's not the whole point. That's not the broader point of the article. It's something that they can argue on. Fine, you can argue on it, and we can get into those specific arguments. But that's missing the forest for the trees. It's like, okay, you want to talk about that analogy. Fine, okay, let's parcel out and piece. What's the better analogy? How is this not good? And fine, but that to me misses the larger point, which is, and the second guy even kind of makes it for me, which is Ethereum is a very new thing, as Amazon was at the time, and nobody knew what it was, or a lot of these people who were actually comparing Amazon to Walmart, whatever, they just didn't know what it was, and so they sold or they didn't participate, and they stayed poor. Congratulations. Now, and also Amazon did pivot, right? So it did pivot, it did open up, and anyone who says right now they know what the value of Ethereum is and they know what Ethereum or Solana will eventually or potentially be in the future are full of shit. They don't know.
yeah.
They don't know.
You
And
could
so
you could say yeah, you could say they can't pivot, but yeah, maybe they can. Maybe like maybe there's a way that they can actually extract value and that value will accrue to the token.
Yeah.
Like maybe all it takes is a like a fee switch or some kind of structure switch, and then boom, it's off to the races.
Yeah.
And if we're going from where we are now, which is like I don't know, like half a percentage of the like Nasdaq market cap for all of crypto or whatever it is, um, to something much bigger, then it seems that yeah, there would be plenty of opportunity for insane levels of growth, like value capture.
Yeah. And honestly, this guy, this person, I don't want to besmirch them too much, but their understanding of why Amazon is valuable now, I think, is retarded because they don't actually capture it. It's not AWS, it's infrastructure. Really, is what Amazon and all these big tech companies really got right is how to build giant, super mega infrastructure all over the world and just kind of completely own something on this just insane level of organization, physical footprint, blah, 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 blah. And then you have different manifestations of that through the sell you everything business, through AWS, sell you data everything business, this kind of stuff. It's infrastructure. That's really kind of, I think, what they got right. Same for Facebook, Microsoft, Google. They really, really, they just became these giant kind of private companies of making ridiculous OEM infrastructure. Anyway, so I think the broader point for me for this article is basically, and it's a what's it, for unbelievers, for pessimists, it's unsatisfying, which is kind of the point. Which is kind of the point, right? Like if you're TradFi and you need numbers and you need a growth model and you need a like this kind of thing to feel comfortable, it's not going to be satisfying. Which is this is going to change the world. It's going to change everything. It's going to own and you it's going to redefine what finance is. And you don't know what the value of it is right now. And but I'm going to tell you, it's going to be beyond your wildest dreams. And that's I think to a lot of people very unsatisfying. It certainly is for me. I can tell you that I'm in that camp, right? But I think that's kind
Yeah,
of the pitch, which is
yeah,
which is okay, don't believe in Apple. Don't buy Apple when it's nothing and right before the first iPod comes out. Or sell it when the iPod comes out, or sell it when the MacBook is good, or sell it when the iPhone goes, or never sell it and realize that it's going to own kind of the world and then become wildly wealthy from that, or or do anything in between. So I don't know. That's
yeah,
kind of where I got the message. Unsatisfying.
yeah, yeah. I guess as a speculator here, though, like, how do you decide where to put your chips? Do you just is it like just put them in the ones that have the biggest mind share right now, like like an index fund of the top 10 crypto? Is that the safe play, or should you be trying to find some specific coin or app or protocol that you think is going to outperform everything else? Like,
Let me return it with an unsatisfying question, Graham. When should you have sold? When should you have gone all in on Bitcoin and then sold all your Bitcoin? And who did that? It was the crazy
yeah,
people who made insane amounts of money off of it. Oh, it's the crazy people who believed it, had like
yeah,
maybe unhinged belief. And who got kind of wealthy, maybe a little tiny bit wealthy? Oh, it's the really smart people who had DCA models and this kind of crap.
mm, mm, yeah,
Yeah. So I don't know what to tell you. I mean, uh,
yeah,
having unhinged, redacted belief in something, maybe that's where you make the real money. The and
yeah. That's quite interesting. I think you're probably right. It's make it or break it.
or I mean, you could be safe and make a bit of money, right, by doing what you're saying, which is you
Yeah,
get in, you get out. Or like I know all these people in crypto. I go to conferences. You know how common it is to go to a conference and be like, talk to someone who's like, yeah, I was there for the ETH ICO. I bought like 30,000 ETH for $5. Oh my
yeah.
God, yeah, I sold it.
Sold it
I
for
sold
10.
it. I sold it 2 years later when exactly right.
Yeah,
So I don't know.
exactly. Yeah. So conviction, belief. I feel like that's the real gist of his post here. Believe in
Yeah.
it. This and it's also kind of telling. I don't know when the market goes into a bit of a downturn. These types of posts surface, and it's people rally around them and like, okay, like this is what's needed, right? Is someone talking about how yeah, like you just need to believe. Um,
Think about remember when Solana went to $8 after the FTX
yeah,
crash? I mean, here's the thing: is all this coming from me is kind of funny. Anyone who listens to the show regularly, because I'm like the biggest wet blanket in the world, you know, like so I can talk about this. I don't think I can trade or invest like this because I it's just not how I'm wired, right? I'm not this. I have to fight my natural pessimism all the time. But I think I get what he's saying,
yeah.
which is you really, really have to believe in this space. You have to believe that Ethereum or Solana or like an L1, decentralized L1 that's not controlled by a government, that can't be shut down, that will change the world. You have to believe that. And if you really do believe it, then you need to just kind of hold on to it and think that the the stuff that's come out in the past year or two, that this focus on it has to earn money now and it has to be profitable and it has to make money in the ways everything has made money before it. It can't make money in a new way. You have to kind of disregard that. So anyway, that's kind of what I got from it.
All right. Um,
are you
maybe
gonna
let's
are you gonna wait? Is it gonna
go ahead.
change? Is it gonna change in any way how you're gonna to invest in L1s, Graham?
Oh, definitely. I mean, every little bit of media I consume gets influences me in some way. Right now, right now, um, I sold my Solana bag, and I think the price of Solana is higher now than when I sold it. It temporarily went lower. I don't know, man. I still think tactically that yeah, there's uh there's more pain coming but that would actually it probably won't happen, and that the max pain is that we already saw the bottom on things like Solana, and so then I'm gonna end up like yeah, digesting Haseeb's post here and then buying back in Solana when it's like 180 or something.
Yeah. It was really refreshing
Oh,
to me. I really like this post because it did. I am one of the mid curver mouth breathers who kind of did get really really. I mean, obviously you can just watch all our episodes. We're talking about revenue and stuff, and it is a good reminder that no, I do actually honestly fundamentally believe that this stuff will change the world and that it'll change it in ways that we haven't even really conceived. Honestly,
well, it's
and
interesting that you say that, David, because it wasn't long ago. I feel like you were telling me that crypto's only going to change the world marginally. It'll just like increase efficiencies slightly.
yeah, I
In
do. I still
Yeah,
believe that. I don't think those two things are incongruous. I think I always believed in Amazon. I fought during that whole time that Amazon is going to eventually make money.
yeah.
I'm one of these people who's not financially intelligent, so I should have put my money where my mouth was. But I didn't think Amazon was going to like make the world a better place. I mean, it has a little bit, but you know what I'm talking about, right? Like I still
Yeah.
same for Apple. I do think it'll, but think about this: a marginal improvement in whatever it is, $300 trillion value complex is quite large. It's a huge,
Okay. Yeah.
it's a huge shift.
There's that, and then there's also um, the things that nobody can imagine happening.
Exactly.
Like I was listening to an interview with between Raoul Paul and Yatsui from Animoca Brands, who I believe you've interviewed, David, right? Have you
That's right.
interviewed
Yeah.
him?
Very cool guy.
Yeah, and like he's talking about how NFTs, like um, the financialization of everything. It's kind of a dirty word. It's like people are like gross. I don't want everything to be financialized, but actually, what it does is it teaches people about the value of money, who otherwise wouldn't know about that. Or like it's like the example he gave was like Pokemon cards. A lot of people, that's how they first learn about like things can be valuable. Wait a minute, like this Pokemon card that is worth like $500 or something, and NFTs just like make that like 10x or 100x, like the possibilities there, for things that nobody really understands could be valuable, like are very high. And um, who knows how that's going to change the world.
Yeah, I 100% agree. And on this Pokemon point, I I've thought this for a long time. I've kind of mentioned it here and there, but I'll do you even one better. A lot of people, and I think NFTs and stuff do a better job of this, but what they really kind of intuitively understand, if they don't kind of actually think about it directly, with Pokemon and these kinds of cards, is you buy these cards and then there's a new set that comes out, right? So you want to sell the cards you have to buy the new cards, right? This is kind of the cycle for these things. And then when you go to sell the cards that you just bought, they're worth nothing or they're worth a lot, right? And this, you get this cycle. And so then you start to realize market influences, and you start to realize how how um how value is captured. And the more you get into this is why I love these card games. Because when I was a kid, you start to understand this is like Pokemon and this ecosystem, like successful card games. You know how they're successful is they reward players with value that stays within the game. As in, I buy a bunch of cards, I spend $500 on cards, okay, and then a new set comes out. I want to continue playing with the new cards, so I sell my old cards. Now, if I sell my old cards and they're worth nothing, pennies, then I'm done. I'm done with this game and I move on. That customer is now left, right? And the ecosystem is now smaller. Now, if some of the cards that I get, a certain percentage, are worth like $300, 400, maybe even higher, right? You have to kind of net it out. Oh, I'll continue playing, right? Because the buy-in is still not that bad. I'm still putting more money into the pot,
Yeah,
and these games, they'll burn out. They'll burn out because they'll they won't respect the consumers part of the value of this. They'll extract too much, like
yeah,
pumped up fun, and then those people
yeah,
just leave. They just leave, and so there's this like really cool, how do you say, like a push and pull of how much how much value do you leave with your user, and how much do you take away?
yeah. And I think like doing that all on crypto rails, there's a lot more space for experimentation and like running it through quickly, and it'll make it easier for projects to narrow in on something that actually works,
Yeah.
and that could like yeah, grow really quickly. David, I think we should take a question here from
Okay, let's
YouTube.
do it.
So let's see here. We've got one from Flying Dutchman 5482. In the debate, Haseeb called stablecoins, quote, the Trojan horse of crypto adoption. What's your take? Are they saving TradFi or secretly dismantling it from within?
Hmm. Well, I have a question for you, Graham. When you hear the word Trojan horse, do you think it's a positive or negative thing?
I think of it as positive because Troy needed to fall,
Okay.
didn't it?
Did
Troy's
it
like
did it
the
need to
empire,
fall?
the evil empire or something. I don't
I think
know.
it was more like tragic that. But anyway, yeah,
Well,
yeah, yeah.
the heroes, right? The heroes who like the underdog heroes, um, found a clever way to bring down the empire and create a new. Maybe I'm misreading my Odyssey history,
No,
but
no, no.
that's how I feel about it.
Okay, so you think stable coins as a Trojan horse are a positive thing then?
I would say that that's positive for yeah, financial. I mean, okay, stable coins are complicated though because of the surveillance on them. Um, but
So wait,
uh,
could you read the question one more time? Sorry, I got distracted by the.
Haseeb called stablecoins the Trojan horse of crypto adoption. What's your take? Are they saving TradFi or secretly dismantling it from within? So I think this person is like, okay, some people are saying, right, like stable coins are going to save the US dollar, right? Because uh, people all around the world are going to be using more US
They
dollars,
they want
and
to. They
therefore
want to.
they want to. And also, as more and more people around the world like get crypto dollars, that just makes it easier for businesses in the US as well to like get those dollars back, to sell those people things. Um, so it's good for the U.S. dollars, good for the U.S. economy.
But is it bad for TradFi? Right. Okay. Um, I so there was an interesting let me just say this. There was a very very interesting podcast I listened to. Again, it was talking about how the banks have performed in the past year. So we've had a lot of stablecoin growth in the past year. Uh, Banks are doing great, really really good. They're in great position. So yeah, it's early innings to stablecoins, but I think maybe what's going to happen is the nimble banks will adopt and will benefit from stablecoins probably, and the ones that don't, who can't adapt, will suffer. Also, it looks like, which is pretty upsetting, the bigger banks really don't care, and they're going to be able to adopt easily. And stablecoins will probably hurt smaller regional banks more. Um, and then finally, this is what everything I just said, it pertains to the U.S., to America. I could see stablecoins potentially harming banks in jurisdictions where the local government really curtails stablecoin use. For example, the UK, right? If the UK has like draconian rules about how much an individual and an institution can hold, how many stablecoins they can hold, that prevents those local banks from participating in this, which would be, I think, bad. But it's probably going to happen, and those banks are going to suffer. Would be my guess. Would be my take on that.
Yeah, yeah. No, I think that makes sense. Um, I guess if I had to say, are they saving TradFi or secretly dismantling it from within? I feel like it's actually more saving TradFi than dismantling it.
Yeah, but I mean, I would say though that did TradFi need saving? I mean, it's always been a behemoth. I don't think it was, I don't think it was flagging at all. Like,
Okay, I guess what
yeah,
I mean is it's more like they're saving the entire U.S. Dollar global system,
yeah,
or then it's more that they're saving it than dismantling it.
yeah. I
They're
would say
yeah they're
then,
they're good for the continuation of the status quo system.
yeah, yeah. It's basically, I guess, to be very pessimistic, like the least charitable way to interpret this is it allows the U.S. government to be a profligate spender, which is maybe not such a good thing. Um,
Yeah, exactly.
yeah, which sucks.
All right, Flying Dutchman 5482. Thanks for your question. Please drop your Ethereum address in the YouTube chat because that's how you're going to get paid.
Yeah, nice question. All right. Can I go on a rant now?
Yeah,
Is
let's
that
move
cool?
on to Mike Green.
Okay. So for me, this week was, I guess, bookended by two must-read articles. We just talked about the first, Haseeb's. It was a post, but the second one's an article. So anyone who's watching this, you have to read these two things. I think they're like required reading. The second one is Mike Green's article. I think he goes by Prof Plum 96 or something, 69, whatever it is. Um, Amazing article. If you're on Twitter, on X, then you had to have encountered this article this week. It was everywhere, not just in crypto, not just in financial Twitter. It was on mainstream accounts. CNBC hosts were talking about it. New York Times writers, everybody had a comment on this. But I think it's a kind of a very timely and important article to read. And I would just want to preface this with a couple things. Mike Green is an amazing financial person. I've been following him for at least 5 years. He is he is kind of basically single-handedly responsible for making people aware and accepting this idea that passive investing is anything but passive as it grows in market share. This is kind of like obvious now. Everybody thinks this, but 10 years ago, 15 years ago, when he was really starting to talk about this and push this into like mainstream finance, he was laughed out of rooms, laughed out of
I don't
presentations.
really get it, David. Passive investing isn't passive.
It is not. It starts to, so the idea of passing the kind of the fundamental idea of passive investing, I think, started in the 80s with, was it Vanguard had the first passive fund. The basic idea is um, passive investing is kind of this perfect vehicle for um, buying the market. So the idea that the market is a pricing mechanism, this kind of like amorphous idea of the market, right? And it perfectly prices things over time, right? Nobody is smarter than the market. This idea of no one is smarter than the market. Um, and there's a bunch of like theoretical things behind this. Like, let's say you have a jar of marbles, right? Have you heard
Yeah.
this thing before, Graham? You have a jar of marbles, and then you ask 10,000 people how many marbles are in the jar, and they've done experiments. They've actually done real experiments on this because it was a theoretical thing at first. When you ask 10,000 people, a million people, they actually get the amount of, if you take and you take the average, they actually like get it down to within apparently like decimal points of how many marbles are actually in these jars. The idea being that the market as a whole is able to price things near perfectly, right? Okay, so a passive fund is trying to represent that this like perfect pricing mechanism. So that's why you have these indexes, right? So you you buy everything within the market, right? And this is supposed to be like a perfect representation of the market's intelligence, right? So you just passively put money into everything, and that captures the kind of the perfect return, or like one of the benchmark or the best return. This is a new idea in the 80s. Okay, so that's the idea, right? You passively buying the market, and you get this amazing return, and then the what's it called? The amount of money you have to spend on managing this is so small, it beats all active participants, and it has for like 30 years, 40 years. It has, and that's why you've seen the rise of passive. The one of the implicit things of this idea though is that the passive player doesn't affect the market's pricing mechanism, right?
Mm.
Even though the passive player is buying everything in the market, because it's buying everything in the market, it actually is not expressing an opinion about the market. That's the
Mm.
idea, right? So you can
Yeah.
do this. Now,
That works only when there's a small amount of passive flows, but now
exactly.
it's come to dominate.
Yes. It's like
So
50,
it's
60%.
yeah,
So it becomes reflexive, right? So this is why you've seen the market is actually kind of sped up, right? Because it's it now is the biggest player in the market, and it has this massively distorting effect on the market. In fact, it is the biggest price signal of the market, and so it's kind of like um, in some ways breaking the market. Also, there's a lot that I mean, you should read Mike Green's work. One thing that you see is there's all this research like, oh, passive investing is good for market stability, right? Actually, when you get to this size now and even higher, it actually starts to have the opposite effect. It actually starts to increase volatility. It decreases liquidity. Actually, it decreases. Anyway, blah 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 blah. He's a smart guy. He wrote this article this week. And
yeah. Well, sorry, I wanted. I've been thinking about this passive thing more recently, and I also listened to separately. Sorry to hijack this a little bit. A very interesting discussion with someone who's predicting that we're going to have the biggest stock market crash uh, like of generations here starting next year. Surprise, surprise, he's an advocate of monetary metals, gold and silver.
yeah, there you go. Yeah.
But yeah, yeah, I mean, one of the points he's making is that it's actually like things are very dangerous here. You've got I think he said 16% of the entire Nasdaq is one company or one or two companies now, and that's way higher than it's ever been. It in the past it was like not too long ago, like 3 or 4%, 5%. It's gone up dramatically, and it's a large part of it is because of this passive investing tendency. And yeah, I think part of the thesis is, as you're saying, the volatility. It can unwind very quickly because it's passive as well.
Yes, exactly. And so Mike Green's thesis is basically what he tracks, the metric that he tracks the most, that he pays attention to the most to see if we're in danger is employment, um, white
Yeah,
collar white collar worker employment actually, because as long as white collar workers are have 401ks and they have these kind of these vehicles that make up I think the vast majority of the passive stuff, money is programmatically flowing in every month, every year, and it'll never go down, right? It just won't because this money is constantly going in. Now, if you have like a depression or recession, major recession, those flows stop going in. So then you'll see they'll stop buying. And then active managers, those tiny people on the margins, they can start to nibble at the prices. And then they'll start to go down. And then you'll start to see redemptions, right?
yeah,
And those
exactly.
redemptions become what's it called? Self reinforcing. And then you get this
So it's reflexive
yes to the downside.
on both onto the downside. Yes.
And
All
because it's
right.
such a huge part of the market, that reflexivity is crazy, like insane. Right? When it was smaller, it didn't matter as much, right? Much it didn't matter really. It didn't affect the market. But now that it's such a huge part of the market, you're talking about like just I mean controlling the market basically. So yeah.
Dangerous. All right. Do we want to get to the crux of Mike Green's?
Okay, yeah, yeah. Let me try to speed this up. I know, but again, I think it's one of these things where I think it's important to cover. But anyway, the idea basically, and I'd love to hear your thoughts, Graham, is that the middle class in the U.S., but I think this is applicable to like Japan and Korea and other countries I've been to. But the middle class is being squeezed. It's being squeezed out, and it's being squeezed out and bled out between like like the low class, lower income, and then the higher income, and to the point where Um, what it means to be middle class, the amount of money it means to be middle class is kind of this incredibly elevated, some would say preposterous level. He says 140K. That was just a number. So I really thought it was a great piece, and it provoked a lot of reactions. I think sadly the overreactions that it provoked, you could just read the overreactions, and it would instantly tell you their political beliefs, which political team they're on, right? Uh, Team left or team right, at least in the U.S. And I just thought this was funny, so I just want to say this. So tell me which side of the political spectrum this complaint was, and you saw. And I'm paraphrasing, but really you saw this over and over again. Here's one overreaction. Okay, financial white guy, the middle class should shut up. Poor people have it much worse. All right, so that's one overreaction complaint you heard. And the other side was, okay, financial charlatan, your numbers are wrong. You're an idiot. The middle class needs to shut up, stop complaining, and work harder. And so
Yeah,
that,
okay. So the first one was the left and the other one was the right,
yeah,
obviously. I just want to like go a little bit deeper into his what because I read his article as well, and I think central to what he's arguing is like you've got if you're in the lowest quarter or third or whatever, your ability to function is about the same as if you're in like the middle two thirds because of the way the taxation works. Basically, if you're poor enough, you get you pay way less tax, and you also get a bunch of benefits like your healthcare, like you don't have to pay healthcare premiums. You get like free this and that. As soon as you start making more money, the government in many countries, countries like the U.S., Europe, Japan, they take more money. So it becomes like, well, what's the point? And I mean, in order to actually get materially like large benefits compared to like the really poor, you have to be really rich.
yep,
And so yeah, so now it's kind of like you got 10% of people who are like doing very well, and 90% of people who are
treading
uh,
water.
treading water. Yeah,
Yeah, yeah, that's what I
and
got from it.
yeah, exactly, and that's what it feels like. I, I mean, from personal experience. Uh,
Yeah, same here.
yeah, and Japan, I think the way taxation here works and the benefits and whatnot work here, it's quite similar to all developed countries. Maybe this situation isn't as bad for other countries like Indonesia or where like there aren't as many. First of all, benefits for poor, and the taxation doesn't hit you as bad as you get into the middle class.
Yeah, I mean, I think that's true. And the reason in the U.S. and Japan in particular, I know this because I'm from America and I live in Japan. And it's funny that you mentioned Indonesia and some of these other countries. The big difference there, Graham, is the cost of services, i.e., the human capital costs, right? Like
Yeah,
you go to like Indonesia or Southeast Asia, you'll see like if there's like a hurricane or a typhoon, the next day you'll see like 50 people working at every place to clean it up, you know? And I imagine the human cost of capital is quite low, right? It's not super expensive. But I mean, that stuff, that cost is way higher in first worlds. And I'm not saying that it should be cheaper or anything like that, but Mike Green talks about this too, right? Like the cost of health of childcare, $32,000 on average. That's you're paying for the humans. That's what you're paying for is the humans to do that, right? And so I think that's one of the biggest differences between some of these areas. And I know it's true in Japan as well, right? The cost of human capital. Um, Again, I don't want to get into. I don't want to get angry people or whatever, but it's this to me is um, okay. So we don't want to. I don't want to get bogged down in this because I know whatever. But how does this relate to? You always ask this. So how does this relate to
Bitcoin and crypto.
How does this relate
Exactly. That's what
to
just going
Bitcoin
to
and
ask
crypto?
that.
Yeah, yeah. So so there's been a couple of moments the past couple of weeks. There was a one of my favorite podcasts. Three three guys who know their macro stuff. They talk about like changes in the SOFR rate, uh, versus like the lending window and repo, blah blah, this kind of stuff. They really get into the weeds. 2 weeks ago, I was listening to the episode. It's a really good episode, and then hour and a half long. Uh, Half of the episode, they started talking about inequality in America. I mean, it blew my mind. Right? They're usually talking about, they get into the weeds about all this like financial esoteric stuff. They're talking about inequality in America. And then I here's Mike Green. He's like this insanely smart, like derivatives genius. He's usually, I listen to every podcast he does. He talks about options and stuff, and I just can't wrap my head around all this crap he talks about. And then he's talking about inequality and how it's like kind of really, really, really important. So when I see this kind of thing, it really makes me think like, okay, well, all these financial people that are like quite grounded in finance in the numbers and stuff, when they start talking about like socioeconomic issues, really need to like pay attention, right? And it really makes me very, very much aware that you have these like tectonic plates that are colliding. Like, who has value, who has money, who has value, who has it now, and how is it apportioned? And people are really upset about this, right?
Yeah,
Right? Like, and so
exactly.
this means it's gonna change, right?
Yeah, exactly. So the thing that's going to change, right? Like, and I mean, the Trump administration, the politics, whatever, like politicians are going to they're going to find ways to alleviate this situation. Uh, Whether it's a direct redistribution of wealth or a
Mom Dami
change in
style, yeah,
or it's a change in the way the finances work. But in all likelihood, it seems to me that asset evaluations are going to have to come down somehow. Like in order to benefit the working class. Like
yeah,
all what's happening now is the everyone who has money, like only 10% of the people hold 90% of the assets, and they just keep getting richer and richer, and it's starting to become politically untenable. And so Main Street may actually get its day in the sun here at the expense of asset holders
yeah. I mean,
somehow.
put it another way, when you see wealthy financial people, some of the smartest, and they're wealthy, all these people, and they're talking about inequality, and they sound passionate about it. That to me puts that's the thing. Like, this is it's gonna come to a head. And then you have like Mom Dami in New York, right? Like it. So you have it on the left and you have it on the right. So, like you said, this is gonna have to change. And I think the question for people in crypto is, how has crypto played a role in this system up to this point now, and what will it play when these forces are reconciled in the future? I think it's made me think a lot about crypto as a thing. Like, how did it come about in the past, and where is it going in the future? Like, I think in many ways the reason, like, I saw this response into to Mike Green, is one of the big reasons that crypto um, is a thing, is that uh, the middle class, young people, have been priced out of owning the traditional assets, houses, equities, and are kind of carving out their own new value class, right? That they can participate on equal footing, right? Because we can't really with the boomer assets, right? we're basically like boomer exit liquidity for them, right? If you buy stocks, you buy a house, your exit liquidity for boomers. It's not
That's
really
what it
fair.
feels like.
Yeah.
Looking at the stock market valuations right now, like I'm positive on um, like tech revolutionizing the world, but I just can't bring myself to buy into the stock market because I know that I feel like that the minute I do, it's going to rug.
Yeah, exactly.
Because yeah,
And then the cost of housing in the U.S. I mean, it's different in Japan, but I mean, it's just like it's insane. So anyway, I think really, I overall, if I were to summarize it, I think crypto benefits from this, um, from this kind of coming, whatever, this kind of reconciliation between where the value has been held up to this point and where it kind of needs to move to. It has to shift, and it's going to.
yeah.
It's inevitable now. It seems like when you see all these different people on the left and right all kind of saying the same thing. So,
All
um,
right.
good for
I
crypto.
think that's I would agree with that broadly. I don't know the timeline, and there'll be volatility, as we said, like when the stock market crashes, Bitcoin tends to crash more, but it rises faster out of the ashes. And you know, also things that have happened in the past, history rhymes, it doesn't repeat. So you may suddenly see a break in the correlation between the stock market and Bitcoin and crypto when something could shift very dramatically. Let's take another question, David.
Let's do it.
So we've got Gulam Tuglam. Sorry, Gulam Tugahublam 6353, and this person has a few questions, but I want to answer. Let's look at this one. If Bitcoin hits a major correction, what's your personal game plan? Buy, hold, rotate, or head?
Um, yeah, I mean, I think you have to buy, right? I just
Yeah,
I if it gets low, let me all right. This is not financial advice, but this is what I would personally do. Let's say I buy, I use my dry powder, and then it goes 50% lower. Yeah,
yeah.
I would do my best to, I don't know, sell a kidney or something. I don't know. I mean, seriously, like
So
I really, I
okay,
do believe,
you are a long-term believer then.
I really am, and I don't think it would like. So let's say I think like, okay, if it goes to 60K, I'm all in, and then it goes to 30. I mean, dude, what an opportunity! I really do think that. So
Yeah.
I don't
So
know. What about you?
yeah, I mean, I'm not. I've sold some. I have some dry powder. Like obviously I didn't sell the Pico top, but I feel comfortable where uh, if it drops, I'm not selling anymore, and I'll evaluate the situation at the time, and hopefully I'll have the conviction to buy more at that time.
Yeah,
That's how
yeah. I mean,
I think about it.
I'm more convinced of Bitcoin now than I think I've ever been ever, and it's because I think the institutions want it. I think Larry Fink wants it, and I think for me, I've told you this before. I think the tragedy of Bitcoin, and actually Mike Green has said this too. He said the tragedy of Bitcoin is that it's going to end up being held by, you know, wealthy TradFi people mostly. I think that's probably the case. So
All right, Gulam Tuglam 6353. Send your Ethereum address in the YouTube chat, please, so we can get you paid. Got $100 lined up for you. Thanks for your question. Let's get to another one here. So this is from Desi Boy. And Desi Boy says, "Good day, guys. Congratulations on 100K subscribers. It's huge news. Talking about NFTs recently, we received NFT from doing Quest on the Bitcoin app. I want to know, maybe in the future this NFT might be useful. Maybe it can be worth $1 million. Just saying. So one thing that is the team has been working on with I think you're referring to the Verse Voyager NFT. Bitcoin.com has a Verse NFT collection. It's kind of a fun thing. You can respin traits, but it also has some utility. So one of the recently announced utilities is by holding the NFT, you can actually get a discount on AI.Bitcoin.com. Our unobliterated access to LLM models, right? You can pay with crypto to use the service, and there's no like censorship in the way that the services are used. So, and by holding NFTs in your wallet, our NFT in the wallet, you get a discount there. So that's one utility. What's coming in the future? Who knows? But I would say get in the community, propose your proposals, and if it makes sense, the team will do their best to integrate them. David, are you still holding your Verse Voyager?
I am. I've got a couple, definitely. Also, I have to say,
Nice.
like, if you are not using AI, you definitely should. And number two, I think the future of AI usage will be things you don't have to use our product, but the future is going to be, I think, of using these aggregators where you pay the aggregator and then the aggregator has access to all these different models, right? So
Yeah.
you're not like tied down to one, right? So
Yeah.
if you're just tied to OpenAI and you have an OpenAI subscription, I don't know, man. I don't think that's the way forward. It's going to be an
Yeah.
aggregator, and then that aggregator has an OpenAI, it has Claude, it has DeepSeek, and then
Yeah.
it's a much
Commodification of the LLMs.
yeah, it's a much better system, much better.
Yeah. By the way, just to clarify a little bit, so if you are staking Bitcoin.com's Verse token, you can get up to $20 every month in free credits on AI.Bitcoin.com. And then if you're holding a Verse Voyager, that doubles your credits up to the cap. So it
Nice.
boosts the amount that you can get there. So some decent utility.
I didn't know that. I'm gonna have to start doing that.
I just want to point out. David.
I just want to point out that one of our news writers, Linzard, he says in the X chat, Graham is a non-believer. Crucify him.
I've got demons, like on the it's like you've like I just feel like it's kind of a healthy way, but it's mid curve.
I mean, dude, I'm there with you. Come on, I'm more of a wet blanket than you are. So blind leading the blind over here.
Yeah.
If only I had just held Bitcoin and done nothing.
Exactly.
Yeah.
Yeah.
But I've got belief now. I've got it now.
All right. What other questions we have here? Actually, David, let's talk for a minute about this. We're going long here, but we're kind of having fun. Let's go a little bit longer.
Let's do it.
Let's talk about the latest wrench attack. So,
good Lord, man.
I don't know if you heard about this one, but 5 days ago, there was a wrench attack in San Francisco where $11 million in cryptocurrency was forcibly extracted from someone. Fun fact, this happened at the home of the ex-boyfriend of Sam Altman. Anyway, so
good Lord.
Good Lord. Yeah, they do things different out there in the SF. So a man in his mid-30s was posing as a delivery driver for a UPS affiliate. They buzzed the intercom carrying a box. He specifically asked for Joshua, which is the name of the person who got wrench attacked, claiming that he had a package requiring a signature. After the guy opened the door, this attacker followed them in and produced a handgun, fired a warning shot, forced Joshua to the ground, and basically kind of mildly tortured them until they coughed up $11 million in crypto. So in the comments on the X post, this was a Mario Naufal post, is where I saw it. It was pretty much all people saying how this proves self custody is broken. For example, quote, the cost of being your own bank is being your own security too. That is simply not feasible for the majority. Means crypto is not feasible for the majority. People will pivot out of crypto. Turns out business hours and 2-day transfers are a feature, not a bug in our financial system. So, what do you think, David? Is this further proof that self custody is dead, or is there a solution?
I mean, I think you already know what I'm going to say. But I've always said this. I don't think the majority of people should have self custody, and I don't think they will. Um, I, for various reasons. This is one example. This is not even the biggest reason, though, honestly. Um, but there are many reasons why I think my mom should never have self custody, at least like to a large extent. Maybe for like, I don't know, the same amount of money she keeps in her wallet, whatever. Um, However, having said that, self custody is like a it's like a check on tyranny, basically, right? Or a check on monopolies, because it basically allows people, if and when things get bad enough, which I think 2008 up to the present have shown that they were bad enough. TradFi sucked. They were mass extractive, insane craziness, freaking wiring money across the world. Just broken, monopolistic, lazy, awful, bad. Anyway, when things get bad enough, the fact that you always have that optionality to take custody of your own money really keeps these large players from being really bad, I think, right? And so from that perspective, it's really, really, really important. But I think in the future, most people are not going, including myself, just not going to have most of your money in self custody. I don't think that's the way. Um, but again, it's really, 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 really important.
Yeah.
Anyway, that's how I think. What about you?
No,
What do you think?
I'm conflicted about it. I think it's super important. And how do you? Um, it's super important for the reasons you said, right? Keep like the financial intermediaries in check. It's my money. I don't need you to uh, tell me that the way I'm spending it is unacceptable, or I don't need you to I don't need to wait till Monday to send it, or whatever, and go through all these like checks. That's terrible. I hate that, and
Oh,
that's
your
why I
fees
love
are
self
too high,
custody.
right? Your fees are too high, or what is this extraneous fee? I'm going to someone else like that. This kind of thing.
Yeah, yeah. So, but obviously, there are risks, and I think there are ways around those risks, uh, like semi self custodial, self custody with a trusted service provider that's all they do is
Yeah.
that they're not like it's I don't know, a different form of custody. It's not like you're holding your money at PayPal where they can uh, just shut you off anytime. Different service level agreement where you're kind of just yeah, paying someone to provide like an extra layer of security on your holdings.
Yeah, that's like,
Um,
but that's you know what that sounds like though, Graham. That sounds like how like almost all gold is held. People don't hold gold bars of gold in their home. They might hold one, but the other 500 bars are like in a bank vault somewhere, right? You know?
yeah, yeah, and that's different from PayPal or some tech company or a bank. The way they hold your money, gold held in a vault is different. They don't have the ability to rehypothecate it. Uh, it's like held, in a security box, and that's yours. You just pay a fee for that. I think that's how self custody kind of has to evolve.
Yeah.
Um,
To me, that's not self custody though. That's you have a trusted service, right? Like it's
yeah,
yeah,
well, it's
it's not
different, but it is
it's not
different
a
because
bank. It's not a bank, but
yeah, it's not a bank.
you're not holding it though.
Yeah, no, I think that's the crucial difference, though, is what we're trying to avoid is this situation where you can just be turned off for political reasons or because they don't trust that like some red flag came up and said like, oh, you bought this, therefore we're like investigating you or something.
Yeah. But I mean, yeah. So I think it's the answer that I always default to with these kinds of things across all different questions is it's the unsatisfying answer, which is it's complicated. No one likes to hear that, right? But it's like,
Yeah,
yeah, probably have a bit of self custody, always, definitely. But like, if you're a billionaire and you're custodying most of your billions, like at home or whatever, I just think you're being an idiot. And I just
yeah, yeah. That's dumb.
you just would
Yeah.
never do it. Even if you have $10 million, I still think it's like, what are you doing, man?
No,
What?
yeah, no. There's no way. I would feel so uncomfortable uh, if I had $10 million sitting in self custody in my office here.
Could you imagine?
Jesus,
It was just
I'd be like looking out all the time.
you just you would like yeah you would just be like you'd have like what's it called, all those camera apps, and just be checking to see if your house is on fire or if I mean all kinds of weird stuff, right? Like, so I don't know.
Yeah, yeah, yeah. I certainly wouldn't be leaving my door unlocked like I do here.
Don't say
Uh,
that. uh, but yeah, I mean, so
good thing I'm a poor. Good thing I'm
yeah,
poor,
yeah.
David.
I'm poor too. I love to be poor. Great. So happy. It's like the Mike Green thing, right? Yeah, like good to be poor.
Okay, we've
Get the handouts.
answered three questions so far. We've got two more to go. We've answered three, right? Yeah. Two more to go. There's a couple of good ones here. Um, I know you'll like this one, David.
Oh God.
Post 2028, 2032 halvings, if the fee market doesn't 10x, what is Bitcoin's credible path to sustaining security without compromising decentralization?
Yeah.
From MK Collins. Great question.
It's a great question. I wonder what that person thinks because I feel like that's a leading question. um, yeah, I mean, uh, this is this is kind of the one of the most important questions. I think you can see. I don't think it would do anything honestly in that time frame. Like, so let's take the worst case example. So the fee market doesn't increase, and Bitcoin miners are not making money. What you'd see is you'd see a collapse of the mining market, but it would stabilize at a much lower amount, as in like the amount of hash rate for the entire network. It still would be decentralized though, right? So it would still
Yeah,
work, right?
exactly. This
It would
is
just
a
yeah.
yeah. Lynn Alden recently spoke about this, and she she didn't this basically this exact question. She didn't seem too concerned about it. Like, um, you only need what does she say? Like 20 million people. doing one transaction per every few months or something, like moderately using the network for a reasonable fee market to exist that could provide a decent amount of security, right? With like not that many people still using only using the network, right? Now, 10, 10 years from now, will there be only 10, 20 million people using Bitcoin moderately? I mean, probably there's going to be more than that. So you're going to have a decent amount of base level security just off that.
Yeah, I mean,
That's the way she described it.
yeah, I still think though that what I'm talking about is in like the next 10 years, the amount of Bitcoin, the coin base that you get would still be enough. I don't think the fees. I think you just ignore the fees for the next 10 years. So I still
Okay.
think what would happen is the Coinbase would be enough to support a smaller like overall hash rate. But I think like you get out like I don't know whatever it is, uh, 50 years, 100 years. Um, if the hash rate gets small enough, Graham, the problem is right. So let's say the hash rate keeps getting smaller, right? Because it, it's not feasible to mine, right? You can't have a profitable business. Then you start to worry about well, then someone could do what they did with Monero, which is just throw a bunch of hash suddenly, and you start the economics I think start to look um, better for attacking the network, right? Um, versus the price of Bitcoin, right? So
Yeah.
that's what I'm talking about, right? So let's say it's like 100 years from now and Bitcoin's like $10 million or whatever. How and the fee market is not that huge. So you have let's say you have a hash rate of like, that's equal to of today, right? Um, I think then I'd have to work through the numbers, but I think then it looks more like well maybe now you can throw in a bunch of hash to kind of mess with things. That's what I would worry about because because the security budget has gotten so small compared to the
Yeah.
value of the coin. Yeah.
Yeah.
But in the next 10 years, no, I don't think that's
Not too
an
worried
issue.
about it
Yeah.
for now. Quantum seems like the bigger threat in the
De-
shorter term.
yeah, definitely.
All right, let's go to the last question. This one's from Haji Ramzan, 3863. Thank you, Haji Ramzan. As Bitcoin adoption grows globally, which region do you believe will drive the next wave of mass adoption and why?
Yeah, I've asked this to a bunch of people this year. I asked this to Tether CEO. I'm not going to say his name. I always butcher it.
Paolo Arduino.
you and yeah, several others. I mean, the answers are always the same. It's just if you basically have to pick one: LATAM, Southeast Asia, Africa. Of those three, I imagine adoption will be driven by Asia. That would be my guess because I feel like there's a lot of money here, but there's a lot of money. There's a lot of people very very familiar with technology. So I think um, they'll have a faster, more impactful, um, a more yeah more impactful. It, there's more money and anyway technology and the money here are going to impact more than other regions. Well, you'll still have lots of growth in Africa and Latin America, but maybe they don't have as much money and or some technical ability, right?
Yeah, I think it's mostly just about the money. Which regions have the most money to put into an investment? If we're talking about using it as a peer-to-peer cash, like I just don't see that happening anytime soon. So, um,
But I think you will see it, and you have seen it in Asia because they want dollars, and so they a lot of Asia is where everybody makes stuff, China and Southeast Asia, and so you're getting a lot of suppliers who are happy to pay each other in USDT. I think that's only going to increase.
yeah,
Um,
but that's USDT. We're talking about Bitcoin.
oh, is it? We're just talking about Bitcoin only?
The question was, as Bitcoin adoption grows, which region do
Bitcoin
you think will? So,
for
what it depends how you
Bitcoin?
define
Oof.
mass adoption. What I think, it's the same answer as what you're saying, David. I think just there will be more Bitcoin buyers in wherever there's more money.
Yeah. Yep.
Um, there's some small areas of people where like it's needed suddenly, so, due to some collapse or something like that. There'll be pockets where people suddenly, large groups of people will suddenly turn to Bitcoin, like they want to get their hands on it quickly. That could happen in scattered regions. Most likely, yeah, places where there's like high inflation or some kind of economic collapse, you could see those pop up. But I think the in general, it's just wherever there's more money, there's going to be more adoption of Bitcoin. And again, by adoption, I mean just buying it.
Yeah. No, I agree, and it definitely will not be used to transact. It just won't at all. It's like zero, zero. I would give that a zero.
Well, there not. There'll always be some Bitcoin trans peer-to-peer transactions. There's
Uh,
always, it happens.
no, no, no. But I'm
Um,
in terms of like meaningful growth.
yeah,
It just is. It's not gonna.
un, seems unlikely. Why would you when you can transact in stable coins?
Yeah. Or transact in Bitcoin on another network.
Well, that counts as Bitcoin adoption, in my opinion.
WBTC or
Yeah,
something
that
like that.
counts.
I
It's
guess so. Yeah.
like it's Bitcoin just on not on mainnet.
Yeah. I mean, I guess so then. Yeah. So
But
if you
still, why would you transact in an investment asset?
yeah. No, I agree.
Like you don't. I'm not selling my Apple stock to buy a car. I mean, you kind of do. I don't have Apple stock, but you kind of do, right? Like if you're like, I'm gonna buy a car, so I'm not gonna pay for it directly with Apple stock, but I'll sell my Apple stock, get the dollars, and then buy the car,
Yeah.
right? And that's what people I think do with Bitcoin
Yeah. Yeah. Oh, yeah.
and
So it
any
really
other
does.
investment.
It does depend on what you mean by adoption. Um, I agree with you. I think to me, adoption just means buying it. I guess I'm pretty skeptical over the next 10 years whether it's gonna be used to do. I mean, maybe lending. I guess maybe, but I mean, even that I don't know. It's seems like the store of value thing is really what's going for right now.
Yeah, well, actually, that's a good point. If you could say that the adoption is like using it as collateral for loans and stuff. That I could see that popping up in yeah, like anywhere really.
The
Perhaps
U.S.
like U.S., but even perhaps like progressive uh, countries that are trying to attract like capital are like, okay, yeah, just
Yeah.
bring your Bitcoin here. We'll take it into our financial system, and you can use it to get a loan on a house. You use as collateral.
Yeah. I mean, I think the U.S. probably has by far and away the most Bitcoin. I mean, in terms of like holders and all that things like that. And yeah, if you see it like normalized where banks, uh, BlackRock or whatever, all these institutions, if they start to take it as collateral, then you could definitely see it explode that way. I guess.
Yeah,
Yeah.
yeah. All right, that covers it. So I think we got all the questions answered. We got everyone's Ethereum address. You're all going to get $100 of Bitcoin.com's Burst token is going to be sent to you. Again, you can stake that, earn Bitcoin by staking it at 20% APY. You can, as we mentioned, stake it and get access to some like many different LLM models at ai.bitcoin.com. Or you can, of course, just sell it to Bitcoin or
Filthy fiat.
Tether or anything you want, right? Or yeah, exactly. So anyway, thanks for asking questions, everyone, and yeah, thanks for listening to Token Narratives. We're going to be back next week as
That's
usual,
right.
and also don't
Well,
forget
next week on
yeah,
Thursday, actually, right? Like a day
that's right.
early.
We're doing it one day earlier next week due to travel, and yeah, looking forward to that, David. As always, thanks. We're out. See you later.